Good morning, good afternoon, good evening, everyone. I'm Anna Berry, and welcome to the 46th Emerging Growth Conference, the last one of 2022. We've had such a great year here, highlighting around 200 international companies. Excited for today. Now, just a few notes. Today, we're running till about 3 p.m. Eastern Time, and during each company's presentation, you can submit questions through the webcast module, and we'll attempt to address as many of these as possible at the end of their presentation. Remember, when we switch to the next company, you'll see a blank screen for a moment. That's just us transitioning over. If you do experience downtime for more than a minute or two, refresh your browser. Remember, our platform does work best on Google Chrome, so if you're watching from an Apple device, you have to hit the play button. All of our conferences are uploaded to the Emerging Growth Conference YouTube channel, youtube.com/Emerging Growth Conference. Please subscribe. And one last note, after today's event, you'll be redirected to the registration page for our next conference in 2023. So stay on and come back to reserve your spot early. Let's begin. I'd like to introduce LiveToBeHappy, Inc. It trades on the OTC Pink sheets under the symbol CAVR and is a vertically integrated platform company focused on developing and building lifestyle brands by acquiring undervalued assets and managing a diversified portfolio of technology, education, and real estate services companies. Please welcome its CEO, Kevin Cox. Welcome back, Kevin. How are you doing today?
I'm good. Thanks, Anna.
Great. Take it away. Floor is yours.
All right, I'll jump in. So let's go ahead and walk through this. It's great to be back. This is our third time presenting. Of course, those who know me know that I always like to go through our disclosures and forward-looking statements. I think it's important that everybody understand that these are forward-looking statements. There are disclosures required, but of course, we're confident in moving forward, and we put the disclosures out there so that you're aware when you're making investments, what you're investing in and the risks associated with it. So let's jump right into our corporate overview. So this again being my third time presenting at Emerging Growth, I wanted to go through a couple of things and show some of the progress that we've made. So first of all, we're trying to make things more simple and easier for everyone in the investor community, as well as our clients and customers, to understand what it is we do. So it's very, very simple. We've boiled it down. We build brands and we improve lives. So as Anna stated earlier, we identify and acquire undervalued revenue-producing assets. We generate value by diligently managing those assets, coming up with turnaround plans or expansion and growth plans. But at the end of the day, we build brands. We build lifestyle brands. And most importantly, our mission is on improving lives. So the brands that we bring in have to have some direct impact on the improvement of people. We're also getting a little more simple in terms of communicating and focusing in on what we do best. So real estate services is our largest platform. Our second largest platform is health and wellness, and we have education. Those are our three pillars, if you will, that form the portfolios of companies that we have. So I'm going to highlight some of the new companies. I'm going to talk about some of the existing companies that we have. And for those that are new to CAVR and to LiveToBeHappy, I'll walk through all of the brands in some form or fashion. So we break things up into three categories. Category number one is our core business. And in our core business, we have Synecori Builders. I'm going to talk about that in a little bit at great length. Within Synecori Builders is another company, HRS, which I'll talk about as well. But we consider the real estate services and those two brands to be our core business. We have two companies under LOI. We're at the very final stages of funding for those two acquisitions. They also are in real estate services. I'll talk more about them. And I'm excited about the addition of Monument Real Estate Partners as an expansion of the real estate platform. So we've talked about Synecori, we've talked about HRS in the past, we've talked about the companies that we have in emergency storm services under LOI. but we've not really talked about Monument. So Monument is a group of commercial real estate brokers, and it is a real estate brokerage that we've brought in-house. I mean, this is a percentage that we have in the past tended to give away. So we're vertically integrating. It's going to increase our margin. But more importantly, they're a source of leads, if you will, for the other real estate brands. And I'll talk about that again some more shortly. Health and wellness. We're excited about the expansion of Renew You. We have a full marketing plan in place. We've developed a new brand in terms of the actual logo. And I'm going to show you some pictures here in a little bit of our Charlotte location opening up that we're excited about. Again, if you look earlier, that's our core. Now we have some other brands. We have the Drip, which is we have a patented climber. We have a patented bike. We'll talk a little bit about those in the health and wellness arena. Now, when we get to travel and entertainment, we've had the Canary brand, we've had the Soku brand. We'll talk a little bit about that, but we're going to focus heavily today on real estate, services, health, and wellness. Now, when I look at travel and entertainment, when I look at education, we have Growing Together Academy, which is fully launched, and we have AV Rover, which I'm going to talk quite a bit about expansion plans there. And then we have small business services with Postbid Ship and Trudent. So let's talk in greater detail about the core business and the core platforms. So first of all, Synecori Builders. So Synecori Builders is engaged in land development, large-scale land development in the Charlotte area, as well as custom large-scale home building. Okay, so they've grown significantly over the last 3 years. I get questioned all the time about the economic cycle and interest rates and what's being impacted on the Synecori side. And of course, we're affected by that on the land development side. All of the national home builders have retrenched, and that makes the land deals more difficult, not in terms of getting them or getting them closed, but in terms of the timeline between expected closing and actual closing. And we've seen this in the past. So depending on whether something closes in a December or it closes in a January, it does have a big impact. These land deals can have a big impact on revenue in a particular quarter and in a year-over-year basis, just depending on when they close. But in terms of the actual core construction, we continue to build homes. Even this morning, we see signs that mortgages are back rising again. Not rates, I'm talking about mortgage applications have increased on a month-over-month basis as interest rates have started decreasing again. So we're well positioned at Synecori for that to continue to expand. Now, a year ago, when we were having this conversation last December on emerging growth, we talked extensively about trying to diversify our income and diversify our revenue. So we acquired a company called HRS, and they are in the reconstruction of large-scale franchise operations and hotels. Excited to announce today that they just landed a significant $3.5 million project with a major hotel brand to go in and rebuild these hotels and retrofit them. That tends to be very economic Fed cycle independent, which was a key thing for us. So we're seeing some growth on the HRS side, complementing what's happening at Synecori. Again, we wanted on the real estate services to be in a non-cyclical position, or as best as we can, given the fluctuating environment brought on by the Fed and high inflation. The pipeline at HRS is now at the same size or beginning to exceed the size of the Synecori Builders pipeline. Those two companies combined give us great confidence in our forecast for next year. So let's move to the health and wellness section, and particularly Renew You. So with Renew You, we are expanding. The expansion takes a great deal of time. One of the things that I've mentioned in the Emerging Growth Conference before is that what we're building, since we're going to turn this into a franchise operation, we wanted to make sure that the first location in Charlotte really typified and was going to be the model location for all of the franchises going forward. So you'll see here in a second, I'm excited, very excited about that. So here is just to give you some sense of where we're at and what's going on in terms of our actual core business expansion. And again, these are lifestyle brands. So on the emergency services LOIs, again, I'll talk a little bit about what our board has done. But we're moving full speed ahead on that project. We're excited about this real estate group that provides a significant amount of EBITDA, a great amount of revenue, and fantastic margins. And again, remediation and storms, they don't have any tangential impact that results from increasing or decreasing of interest rates at the Federal Reserve. So Monument, real estate expansion, we have, for example, deals in the pipeline already at Monument that would make this a powerhouse within our platform. So our platform now includes Synacori Builders, which does land development and home building, Monument Real Estate Partners, which does commercial and large-scale brokerage. We're bringing in remediation services and large-scale storm recovery services through our acquisitions once they close. And that will make up, and then with HRS, we also have a significant addition there in retrofitting of hotels and franchise operations. So I'll give you an example of how this plays together. So we have Renew You, which we're expanding, and this is the actual pictures from the location and our model store, our model clinic, if you will, in Charlotte that we're expanding. We're expecting that to open in the middle, soft opening in January. We had hoped to open it a couple months ago, but we had issues securing equipment, and we wanted to make sure that it was exactly how we wanted all of our franchises to look as we begin to roll them out. We have a franchise disclosure document that we're getting ready to register with the FTC. That's an engaged process. We'll get that done. We'll open this location, perfect the process. We have developed 3 tiers of solutions for clients at Renew You, and I'll talk just briefly about those 3 tiers. So tier number 1 is the basic neurofeedback package. And within that tier, you get neurofeedback treatment. That includes doing a map of your brain to look at and identify underactive and overactive areas of the brain that may be creating symptoms that mimic ADHD, anxiety, and depression, as well as other more complicated issues. And what we found is that, and the science shows that with neurofeedback, if we can retrain the brain to moderate and be in balance within the different areas of the brain, we can see dramatic improvement in those symptoms. So with package number 1, you get neurofeedback. With package number 2, you get neurofeedback and you get psychotherapy. And with psychotherapy, we found that the science shows that neurofeedback combined with psychotherapy has an even greater impact on the improvement of symptoms in this area. And then we add metabolics. Now, one of the things that's important with respect to metabolics is that the combination of supplementation, neurofeedback, and psychotherapy provides an extremely effective treatment. And then the third and final package, which we're most excited about, involves photobiomodulation. And this is a therapy that actually it scientifically is showing incredible progress in the treatment of the vagus nerve and the treatment of parasitic issues in the gut. And the science is showing, Dr. Krishner and Dr. Suter, who has over 50,000 data points, what they found is that if you combine the fire-flight treatment, this photobiomodulation, with custom metabolics, psychotherapy, and neurofeedback treatment, the likelihood of minimizing long-term degenerative disease, as well as improving dramatically short-term symptoms from ADHD, anxiety, depression, and others is amazing. And I'll give you one example. We have a testimonial from a client who came in, brought her daughter. Her daughter was slightly on the autistic scale, or spectrum, I'm sorry. And when her daughter came in, her daughter had never spoken in complete sentences. And this is a verified testimonial, which we can't wait to share with the public. But in doing this, she never spoke in complete sentences. She could communicate, but it wasn't complete thoughts, complete sentences. After treatment with us, she began to speak in full sentences with some level of emotion, which is dramatic for anybody familiar with those on the autistic spectrum. The mother, of course, was beside herself. She was bawling and crying and couldn't believe it. And the daughter, this has changed her life forever. Of course, there's a lot that goes into this treatment that we do, but these are the type of things that improve lives. This goes right back to what we do. We build lifestyle brands that improve lives. And we'll talk a lot more about it, but we're excited about bringing this incredible treatment to the Charlotte area and then to a city near you as we expand across the country. So as a company, again, those are our core brands, what we're really building the company around. Everything we're doing is looking to the future here. So first of all, we're building a team that is incredible. So I want to walk through our board of directors and board nominees. So we have Russ Sinecore, who's chair and director of the board. Of course, myself, I'm CEO and director. We've added as a board nominee, Joe Caprino, who's the president, is now the president, and I'll talk a little bit about his background here in a second. Kristen McClave, she is going to be our compensation committee chair, is a director nominee. She is a powerhouse with experience as chief people officer and chief operating officer for a global manufacturing company with near $1 billion in annual sales and 4,000 to 5,000 employees that she was responsible for. She brings a great deal of experience, has spent time managing businesses overseas, just a powerhouse in Kristen McClave. She's joining us. Bona Allen, who is a member of the National Association of Certified Directors, has been CFO for many years of a very large construction firm, and who has provided CFO consultancy and board direction for a number of strong companies. He's a board nominee and will be joining us as the audit chair. Both Kristen and Bona are completely independent. And what you'll see here with our board of directors is that we now have a majority independent board members. So, or board nominees. So Tim Samuels, who's been a board member, has been with the National Home Builders. He is a land guy, a brilliant gentleman in Charlotte. He's a director. He also is independent. We have Bob Cornelia, who's a CPA, years of experience in small, medium-sized business accounting and audit, also independent. Xavier Greer, thrilled to have him on the team as a director nominee. He's a member of our Monument Real Estate Partners Group, has a broad background in the arts, in the creative areas of the arts, as well as in real estate and commercial transaction. And Dr. Greta Warda, she is a cardiologist, been a cardiologist for 25 years, is also very much in the forefront of some of this science that I've been talking about, working with Dr. Suter and Dr. Krishner and others as we advance this, make these incredible advancements at Renew You. So also independent. So we'll have, upon consent of the shareholders, we'll have 5 independent directors and 4 insiders, giving us a total board of 9. We had fantastic meetings in Charlotte this week, and I'm going to walk through a little bit of the updates from that board of directors meeting. So first, we reviewed everything. We've reviewed the documentation, and we received full authorization to proceed and complete our acquisitions with the storm services companies. Now, again, this is still completely dependent on final commitment funding from our U.S. capital, which we've discussed in the past. We did complete the quality of earnings by BDO on these acquisitions. There were some questions that arose, just in full disclosure, related to the size of the revenue as it pertains to how quickly and how likely collections are during a post-storm and trying to pull money from the insurance companies in a post-storm situation. We believe we've got that resolved, should know more this week, but we're excited about making those acquisitions and adding them to our portfolio in the real estate services group. We have decided, as we continue to make our progress toward a eventual uplisting to the NASDAQ, we have the independent board. We've met with large financial institutions, investment banks, and underwriters, and all of them have requested that we change the corporate name. So we met as a team, and the board has authorized us to change the corporate name. We're evaluating and have our marketing firm internally evaluating several names as part of this. More to come with respect to that. Our 2023 capital plan has been approved. We have a capital plan that is reliant on 3 sources of capital: funding from lending institution, funding from investment, and funding from internal growth of the acquisition and the EBITDA that comes from the acquisitions we're making. The board nominees were all reviewed and approved for a shareholder consensus vote. More information coming there. We did review the initial registration requirements and all of the forms and documentation that go with it. We are ready. I'll comment on the audit in a second, but we are ready to become a fully reporting company, which we're excited about. There was a management proposal and a plan to reduce the outstanding shares in the float. The board's reviewed that. There's some of that I can disclose now. We have an institution that would allow us to, that would come in and allow us to put us in a position over the next 12 months to potentially reduce outstanding shares by as much as 20%. Now, again, there's a lot that can happen, especially as the capital markets change, as risk is taken off the table and then put back on the table in the capital markets. But what we're looking at here is the opportunity to reduce the float. To reduce outstanding shares and the float as well by as much as 20%. There's work to be done, but the board looked at it, has looked at the proposals that we have and that we presented and approved us and authorized us to do the diligence and see if we can make that happen. We have reviewed a recession contingency plan. All indicators are that we'll be in a recessive environment next year, and we presented a plan related to that that the board approved. And they authorized us and specifically encouraged us to simplify the mission, change the name, evaluate all the companies that we have, and focus all of our energy on long-term profit-producing business units and brands. So as you can see, we're already simplifying the mission, building brands, improving lives. We're simplifying the number of portfolios that we want to focus on, and we are focusing our efforts on the profitable brands and the brands that show the most promise of growth within each of those. So a little bit about the management team. You have Russ Corey, who's our chair and COO, continuing to drive us forward, constantly looking into the future and pushing hard to make sure we achieve our objectives. I come in as the CEO. I'm come in to direct the operation, provide strategic input, identify the plans, and I am a long-term thinker that is engaged in building a long-term, strong, real business. A lot of you may see on my Twitter that I'm constantly talking about #real, #progress, because I play the long game, not the short game. And we have Grant Edwards, who has a great deal of experience as Chief Financial Officer and in public reporting, has built and been associated with the construction of a large-scale holding company and provides great input for us. Dr. Stephanie Christner is our medical director. Again, we've had some big breakthroughs. We're excited about that. And then we've got Joe Caprino, who I want to spend a little bit of time talking about. Joe has 20 years in experience coming in as president, CEO, senior business leader of various businesses, doing from turnaround to growth. He brings a lot of operational experience and focus. Spent 10 years in NASDAQ and New York Stock Exchange companies, been heavily involved in governance, and 15 years in investment banking and business development. So what I hope you're seeing in all of this is that we've put these businesses together. Our financials show growth. They show phenomenal growth, actually, on year-over-year basis. And what we're now doing is we're putting the package around it. We're putting the board in place. That is stellar. We're putting the right people in place. We're narrowing our mission. We're focusing heavily on where we're going and the brands that are profitable. And we're simplifying our approach and our messaging. But thrilled to have Joe on the team. So if you look at our performance, and again, our forecast of up to $30 million of revenue this year is dependent upon when a particular land deal that represents $11 million of revenue closes. It may close this month. We're still hoping it does, in which case it would allow us to meet our objective. If it pushes to next year, that's possible, and it would put us closer to the $20 million range. Okay. But if you look again, going back to 2019, where the company had no revenue and then started to barely make a profit in 2021, we've already exceeded 2021's profit at the end of the third quarter. Our investment relations group has gone out and done analysis, says right now we're trading at about an 8 to 9 times discount, and we have been slowly building the company and building the foundation to really create massive growth. So that's our company. For those that don't know it, it's an update from the last presentations. There's so much good news I could share. There's always risk in this environment. But if I look at it and someone said, hey, Kevin, you're coming into this organization, the supply chain is going to shrink, inflation is going to skyrocket, interest rates are going to go up the most they've gone up in 10 to 15 years. Capital markets are going to collapse. Risk is going to be taken off the table. Crypto is going to fall apart. If everybody said that's what's going to happen, but you guys at LiveToBeHappy are going to grow your revenue, you're going to grow your profit, and you're going to build a real company in the middle of all that, I would have been thrilled. So I think our team's done a fantastic job navigating all of the external curveballs, and I'm thrilled to see what we can do going into 2023. With that, Anna, I'm going to turn it over to you, and would be glad to answer any questions.
Great job, Kevin. Yeah, we've got some questions for you. Let's start with a couple of website questions. The icons on your company's website, can these be made links so that people can get more data on each company? That's a question from Bill.
No, it's a great question, and the answer is yes. The first version 1.0 is out there. Version 1.2 will have links to the various companies that'll take you to the company websites and give you a great deal of information on each company.
Great. You mentioned this, but some of our audience members might have joined in later. Can you give us an update on the status of any uplisting?
Sure. So from an uplisting perspective, there's two approaches, and we're doing both, right? So first approach is, moving up to the QB and becoming a fully registered company. That is very much in progress. All that's remaining is the completion of our 2021 audit. We expect that we were hoping that would be done by now. There's some confirms that the audit firm is waiting back on, and a couple of things that we need to do on our side, including some funding. As soon as that's done, we'll have the audit ready. I'm hoping before the end of this year. Actually, I'm planning before the end of this year. That will allow us to uplist. And then we're also looking at a eventual NASDAQ uplisting. Of course, we've got some work to do to get that done, but we're pushing full speed ahead in that direction as well.
Great. And another update on the SOKU, the DRIP, we've got symbol change. Just give us another update on some of these and the 3 LOIs, please.
Sure. So let's start with the SOKU and DRIP and symbol change. So our board's asked us to analyze every business that we're in and determine what is, every business that you get into is a heavy lift if it's a new business. So they've asked us to determine what's the lift for each of these businesses to really make them successful. How are we going to fund that lift? And is that going to improve or detract from our now simplified mission? Okay, so let's start with SOKU. SOKU is a brand that we planned investing in. We're not sure we're going to take that forward. We haven't seen the adoption that we were hoping for. So that's still to be determined. With respect to DRIP, we have 2 products within the DRIP, both patented. Patents were both awarded in 2022. So we're very much interested in those and plan to move forward and execute or prosecute, I should say, those groups that we think are infringing, as well as build the prototypes and get them out to market. So DRIP is part of the health and wellness group. And again, we've reduced ourselves to 3 platforms, so DRIP still very much fits in. With respect to symbol chain, we have, so that everybody on here knows, Bob Silver, who was our chairman and chief innovations officer, had been working on several things with NFTs earlier in the year, had some dealing with symbol chain, but that market collapsed. The NFT market's collapsed, crypto's collapsing. So again, heavy lifts, probably not going to do much in that direction, given what's likely to be a continuing and ongoing recessionary environment in 2023. With respect to the 3 letters of intent, I mentioned them earlier. We're very much pursuing those. We're in the very final stages of getting them closed. I wish I could tell everybody they are closing. I can't, because our lenders are going through with a fine-tooth comb all the findings that BDO presented as they did the quality of earnings.
Great, Kevin. Also, can you give Q4 guidance as well as 2023 projected revenue and EBITDA?
Sure. So let's look at, we'll start with Q4 guidance. As I mentioned earlier, depending on when one of our large land deals closes, whether it's December or January, since it's a very large deal, will either be in the $20 million or the $30 million range. I would tend to, because I tend to be a conservative, I would fall back to the $20 million range, which is why I put a red circle around that. But who knows? Maybe we get lucky in the next 3 weeks and things close faster than we think. With respect to with respect to 2023, so with 2023, we have a number. So our core base business will grow. Okay, so we based on the pipeline that we have, the businesses we have today, no additional acquisitions, nor closing on the LOIs. Just our base core business, we have almost $30 million in our pipeline for 2023. So very confident in that pipeline. We went through it with the board and the external independent reviews. So confident that, if we're not at 30 million this year, we'll be at 30 million next year. Now, again, that's if we don't close on our LOIs. And that's not assuming a fantastic economic environment. So really hard to pinpoint where we'll end up for 2023. But I would put I would say, again, a projection, I would say a floor of 30 million. We're either going to hit 30 million this year or we're going to hit 30 million next year with no additions.
Great. Can you also break down some of the revenue for each of these divisions?
Sure. So obviously the majority of revenue comes in the real estate services division. Approximately, I would say 80%, that's an estimate, is coming from the real estate services division. And then we intend to grow and get the health and wellness division to 20%.
And Keith, sorry, Kevin, do you have anything else to say about that?
No.
Okay. Pete Lind has a question, wanting an update on your 3A10 mitigation.
Sure, the infamous 3A10. So just so everybody knows what a 3A10 process is, it's a process of settling debts utilizing a court-sanctioned settlement wherein they reserve a certain amount of shares for sale into the market to pay for the acquisition. So built into our funding is the ability to buy out to resolve those debts without having to go through the 3A10 process. Okay, so our expectation is that we'll be able to settle those debts, which would take a significant number of shares that are sitting out in the float, out of float.
Great. We have a few questions from Tracy Schultz. We just spoke about the divisions, but can you break them down a little bit? Which ones will you be spending the most money on to grow, and where is the most growth?
So there's revenue growth and there is margin growth or profit growth. Okay, in real estate services, we clearly will see the most revenue growth. The most margin growth will come from health and wellness. So the part of taking a diversified approach and a long view, which is what I do, is that we want to build both revenue at the top line, but we want to be sure that we're diversified and that we're improving our margins and seeing profit growth on the bottom line. So we're going to invest in real estate services and health and wellness equally. That will allow us to see the revenue growth and see the profit growth over time. Some of the technologies that I talked about with respect to neurofeedback and biophotomodulation and the things we see with metabolic treatment as well, is extremely exciting. We could see that division go from one store doing $1.3 million and 300 to 400,000 in EBITDA to 10 stores doing 12 million in revenue and 5 million in EBITDA. So the answer to the question is we're focused on, in terms of where we're going to put our money, we're focused on real estate services, health and wellness, and education. That's where we're focused. A lot of these tangential businesses, if there's the opportunity to create rapid exponential growth, we'll do it. Otherwise, we're going to focus on those three areas.
Great. Last question from Lucille. Lucille wants to know what milestones should they be looking for in the news and over what time frame?
Great question. So in the news, when you take a long view and you're building the foundation of a real company designed to create long-term shareholder return, a lot goes on in the background that can't be disclosed to the public for regulatory reasons. Okay, so milestones should be simple: closing of the acquisitions, finalizing of the audit, uplisting to QB, eventually uplisting to NASDAQ, and hitting our revenue objectives.
Right.
All of those things are not simple, and there's a lot of work behind the scenes. But if I'm looking from an external news perspective, those are the milestones.
And an upcoming name change. We look forward to hearing that.
Yes.
All right, Kevin, do you have any closing remarks for our listeners?
No, thanks again. I appreciate Emerging Growth, and I appreciate you hosting, Anna. Thank you so much.
My pleasure. Have a Merry Christmas. We look forward to seeing you in 2023.
Sounds great. Thank you.
All right. Okay, everyone, stay with us. We'll be back in just a little bit with our next presenter.